Hello traders, welcome to the channel. I'm your host Running Forward. Today is June 27th. I have three stocks here I want to share with you. These are on my watch list for Monday's trade. These are not financial advice. These are for educational purpose only. So as always, let's look at the market SPY first. SPY is now in the all-time high, so it's in the bull market. So the first stock on my watch list is ticker symbol U. At first, it doesn't look much on this daily chart, but we can still tell that it's in an uptrend. It has a trend line like this. You can see that it's in an uptrend. And after this big move, it pulled back, and it seems like it has fine support near this area. Now it's going back up. If we come to the weekly chart though, you can see that this stock has been beat up pretty badly, but it has been basing. We zoom in a little bit more. You can see here that it's putting up this basing in this basing box, right? And then right now, if we're zooming it a little bit more, we can see that on the weekly, it's also an uptrend. It has made a higher high and a higher low, so it's an uptrend on the weekly. And if you look at this um, 5 candlesticks for the past 5 weeks, it's a very bullish setup. It has jumped up on this candle this week, and then for the next 3 weeks it was consolidating. It was pulled back, but it never went below the bottom of this green candle, and it looks like it finds support near this area. And this week, this green candle indicates that the buyers are getting in, so it has great potential to go up. And if we look at the uh, risk, it's about 5-6%, depends on where you get in. But if we look at the potential, the first target, of course, is to take out the recent highs, this area. And then if we have strength to go higher, it will take out probably this support resistance area. And if it can go even higher, maybe come over to here, and then here, close to the 200. Let's take a look, measure the potential gain from this area. We're getting here to this first target, it's already 15%. And if we come to the second target, that's 30+%. Third target is 61, fourth target 80%. The point is this stock has great potential. I'm not saying that it will go to the first target or the two, three, fourth target right away. Stocks don't move like that. But this stock, from a risk reward ratio standpoint, this is a great stock to put on your watch list. So that's the first one. The second one I have is FCX Freeport. So this one, zoom in a little bit. This one, as you can see, that it gapped up and past this resistance area. Now it's consolidating. We have to be patient to see if this gap up of this resistance area can hold. The reason I say that is because if we look into past candlestick or price action, we can see that this is a resistance area. And look what happened over here when price passed this resistance area. It couldn't hold, and then look what happened. It dropped way down. And then this time, moving closer to present day, when it passed the resistance area, it formed double bottom, this double bottom here before it went up. So what I would do is I would wait to see if the price will pull back. Maybe it will come all the way back to fill the gap. I don't know. But when it's ready to move up again, I want to be there and take the trade. So this one is on the watch list. So it depends on how the price moves before we can take the trade. The risk is probably 2-3% maybe, but the reward. Let's look at the target here. So the first target is probably here, somewhere here. Second target maybe here. Third target here. Just take out the past highs. So if we do a little measurement here, if we just suppose we got in from here to the first target is already about 7%, 12% to the second target, 15 to the third, and about 20% to the fourth target, if it has the strength to go that far. But this is on the watch list. But this one will need some waiting um, for the price to tell us where it wants to go, to come back down to fill the gap first, or just consolidate it within this green candle and then go back up. And then based on that, we decide when to get in. The third one is Dollar General. Dollar General, you can see that it has been consolidating very tightly within this price range. It's about 140, 114, 115-ish, and 110-ish, about $5 range. And if you come to the left, you can see that after this big gap down based on, I believe, earnings, right now the price on these 2 days has already filled the gap. And the consolidating, to me, is the buyers and the sellers are battling, and then the buyers are just waiting to digest this huge selling that probably a lot of people got in before this big drop, and then they just panicked and sold their stocks because of this big drop, and then the buyer just patiently waiting to digest all that. And then I think what we can do is we can put a price alert on top of this small box here. So here, so if the price get above this box, so above 115 maybe, that's when I think it will be a good time to get in. You can also get in right now. Let's see the risk. If you get in right now, the risk is about 3%, 3.5% maybe. And I think the first target we can see is probably it has filled this gap, but maybe it will come over here. There's some resistance here. Maybe that will be our first target, and then the second target maybe to take out this. Third target maybe come over here. So let's take measure this from here to the first target, 7%, 6%. Second target, 10+%. Third target, 17%. If you have been listening to my videos, you know I'm a option trader. I do trade stocks. I do buy stocks, but I'm more of an option trader. So for a 10, 15, 17% stock gain on options, the profit will be quite sizable. So these are the three stocks that on my watch list for next Monday, or maybe even the first half of next week's trade. Hopefully you find some value in this video. Until next time, see you.